Welcome back. We'll continue with our focus on earnings, and one stock that is up and about today, in fact, one of the top gainers in today in trade is Karur Vysya Bank, up more than 10% on the back of an exceptional third quarter numbers that the bank has reported. When we have Ramesh Babu, the MD and CEO of Karur Vysya Bank, joining in now. Mr. Babu, thanks very much for your time here. I mean, let me start with the third quarter numbers. Pretty impressive, especially what you've done in terms of margin growth. I think it's one of the highest among the banks that have reported their third quarter numbers so far. What next from here on? Can you better this performance? Let's start with the margins in the fourth quarter, especially as, the next policy comes out. Perhaps the street is factoring in at least one more rate cut from RBI. Do you have levers to improve this performance from here on, starting with the margins?
Yeah, good morning, Ms. Shrita. Thank you very much for the call. In fact, before I talk about, luckily, we could tick all the boxes this quarter. And above all, three parameters which we continuously monitor is growth, profitability, and asset quality all have worked well. And above all, December 20, the quarter profit was 35 crore. And this quarter, it is 10 crore short of 700. So that way, in the last 5 years, the profit has grown by 20 times. And 2022 also, if you look at our annual profit was 673 crores. And this time the quarter profit is 690 crores. So that way, the many of the things what we have planned started working. So that way we are able to do. Now, if you look at the margins also, it is not only on account of a cost of deposits coming down or yield slightly going up. Multiple factors have supported us. So I agreed. 16 basis points, we have got the benefit out of the cost of funds, and 6 basis points on the yield on funds also have gone up. But operating cost also has come down, credit cost has come down, because there is no room for providing now. We are at such a stage now, because net NPA is at 0.19%. It is one of the lowest that way. And above all, SMA numbers also, if you look at it, it is 0.24%. So that way, we have a perfect control on the future cost, credit cost also. With all these things, if you look at it, the margins, I won't say it will improve. The reasons are simple. Because Q3, we had the benefit of many of the deposits, time deposits got repriced. So that benefit, it may not be there in the Q4. Okay. And above all, few of the low cost deposits may get repriced in this. So that way it may be flat. But the yields are concerned, we have done something. Few of the loans we have shifted to fixed rate loans. That has helped us, which used to be around 8% at a point of time, fixed rate loans. Now it has moved to 23%. It may further go up. By the end of the Q4, it may reach 26, 27% also. That may keep us afloat, despite the rate cut in the December also. So we have given a guidance that we will be able to maintain our ROA of 1.85. Initially, we were saying it will be between 1.55, 1.65, those sort of range and all. So with the confidence what we have got that many of the things what we are doing are working, we gave an indication of 1.85 for the whole year.
All right, Mr. Babu, take that point. I remember you earlier saying that you expected NIMs to be between 3.8 to 3.85. Now you've upped the guidance on that as well. You said if the rate cut could come, it would be around 3.95, and you're closer to 4 right now. So I wanted your thoughts on that one, and also 1.85 ROA. We will take that. Also, congratulate on the board giving you an extension for 2 years. Now it's the RBI which will go ahead and have to do that. But I remember from that conversation, two things stood out. One, you said that RAM has grown upwards of 20%, and you expect to maintain that 17-18% sort of growth rate on that portfolio. Has that happened? And the second part, corporate book, which is 16%, which was at that point 16-17% of your assets, you wanted that to go back to between 20 to 25%. So on both those parts of your book, if you could give us a sense.
Yeah. First thing is I'll talk about the corporate book. It's not the question of either corporate or RAM. Because you know very well the deposits, it is slightly scarce and you need to pay some cost on that. Wherever we get the better yields within our risk appetite and where the safety of the funds are also there, we will put the money there. So that is the reason what we thought in the RAM segment also. You can look at it, suppose under the retail segment, we are not doing well in the home loans as well as vehicle loans, because the pricing what we are getting is very low there. So there we are growing in the gold loans as well as the LAP there. Likewise, commercial, which is yielding well, we have gone there. Agriculture also, the majority of the gold loans what we are getting, we have got it. So our focus mainly is on the yield rather than the segment. So whereas corporate is concerned, earlier we were not growing, but this quarter you could see around 6% growth. The reason is we have identified few sectors like CRE, like ECL contractors, whatever are there. Few other areas we have found out where the pricing what we wanted, we have got it. Overall corporate portfolio yield also it is 9.2, 9.3. Earlier it used to be below 9. So that way we will look at the first of all deposit cost, not the question of 17, 18, 20% on the RAM. What all deposits we can raise reasonably good. So based on that we will plan for our advances growth and all. So preference will be given to the RAM. I don't think saying that this 14% of the corporate will move to 20% in the near future, because lot of potential which we need to exploit under the RAM segment is still there. We will try to get that because we have more or less mastered the risk management in that, the onboarding, guardrails, monitoring, with all these things. It is better we put our money there. If we exhaust our opportunities, then we'll move to the corporate.
Okay, so the focus will very much remain on retail, agri, MSME. But Issa, specifically on gold loan that you briefly mentioned, it's now almost a third of Karur Vysya's book. How much more do you think you want to grow it? What kind of opportunity do you see? And in terms of pricing as well, what kind of competition are you seeing in the market? Because we've seen a whole host of financiers step up the game as far as gold loans is concerned.
I know. But if you look at Ritu, last 5 years, more or less our gold loan book, though it has been growing, it is below 30%. So internally we thought saying that every product also need to have a cap. That's why gold loan portfolio will be below 35%, irrespective of the vertical it belongs to. Even now also, if you look at it, it's below that number. So that way we are mindful of the fact that no product should overtake, and overall the bank should not become a product specific bank. So next, coming to the competition is concerned, I know very well the competition is there, but gold loan is such a product where the customer connect and the TAT and the how faster you are able to give them hassle-free, that makes sense. So we have the expertise. In 1916, when the bank started with the gold loan business. So that way the gold loan is the DNA of the bank that way. So we don't have many delinquencies also there also. So that is the reason many of the branches, they do that. And in fact, few of the branches, what we do now, where the potential is there, we have created infrastructure for the gold loans, wherein the TAT can further improve. So that way we feel that we are in a measured way going. The 35% when we feel, we look at it, what pricing we are getting and all, accordingly we'll plan.
Right. A quick question, and if you could answer all the three parts, that would be great. One is on your credit card. You said that you are starting that business and you're taking their steps once again. So how big do you expect that to be? Second, you are looking to increase your revenue coming in from non-fund sources, which includes the like of bank assurance, etc. How big will that be? And third, the stock's done well. Business is all good. Are you looking to raise capital?
Yeah. So first 2 points, Mangalam, in fact, we are left with a quarter. So let us size up what we are doing during this quarter. When we come with the March numbers, we will give an absolute guidance on respect to the credit cards as well as non-fund also. But because we are in a baby steps we have taken in these two, and credit card particularly some sort of a people also we have taken, they are yet to stabilize. This quarter, if we see the stabilization, we will have a clarity by the end of the March. We will be able to disclose along with our March results. The same is the case with non-fund based, because we could see some sort of a traction in few outfits. The challenge for the banks is how to get the traction in the rest of the outfits, which we are very confident in the next year to do that. Coming to the capital is concerned, you would have already observed that our capital adequacy is around 17%, and without plowing back the profit of this year. If you plow back the profit at the end of March, it will be 18%. So having more than the required capital also is not warranted. It may tempt you to take undue risk, which may pain you later. Currently, if you have seen that our unsecured book is below 2%. There itself, we have some scope to go up to 5%. With all these things, I feel that next 2 years, there is no requirement for the bank to raise the capital the way which we are earning the profits.
Got it. So no requirement for capital raise in the next 2 years. Finally, Mr. Babu, very briefly, run out of time. Slippages, especially in the retail segment, some of the lenders we've been speaking to have indicated mixed trends. Some are saying in the MSME, the stress is peak. Some are saying it may take another couple of quarters. What are you seeing on the ground? And, any guidance you could give us as to where you could close the year?
Yeah, in fact, MSME growth, initially the guidance given by us is 2% over the industry. So what we feel is MSME can be around 15-16% annual growth. Ritu, the only point is we can grow abnormally. The point is the pricing is the key. There's a lot of competition in the market for the pricing. So wherever it is not making sense for us, it's not fitting into our scheme of things, we are leaving many other accounts there, because in a particular locality, if I reduce a rock and give a rock bottom pricing, 20-30 people we may have to give that rate, so which is unfair. So that is the reason few of the accounts we are exiting consciously. This is the right time when there's a lot of demand in the market. The weaker accounts, you need to get out of that. If you do all the math finally, otherwise you can grow at 20% consciously, it is not a big problem. But we thought with all these things, simultaneously cleaning up and growing safely and getting the proper yield, all these three pillars, if you take care of that, growing at 16% in MSME should not be a problem.
All right, take that point, Mr. Babu. Thanks very much for giving us all of those details and insight into what's next in the next quarter. And we hope to have you back here to discuss those going ahead. Thanks very much for your time. We have to slip into a short break, but when we return, we're going to discuss market technicals with Rajesh Palvia. Stay tuned for that.